The day trading tax trap that I see beginners get caught up in quite a bit. Hopefully this is not you. Hopefully your accountant or whoever does your taxes has already warned you against this. But I want to get it out there because it can be a very nasty situation, because if you get caught up with the IRS, they're sort of one of those people where they're not going to go anywhere and they're going to get what they want. And if you put yourself in a situation where you're not able to give them what they want, I'm not going to be over dramatic and say that sends you to jail, but I am going to say you might be looking at some payment plans that you never had forecasted for your personal finances. And when those sorts of things happen, that's going to affect your wealth building. And if you're someone that's watching this video, I'm assuming you are in a money mentality. Not in a greedy sense, but just in, hey, I want to take control of my finances. I want to build wealth. And hey, I've heard of day trading. I think it's a great way to do it. And fantastic. But how does this work? Well, let's break down a couple of situations here. And let's say that we have Tom here. And Tom goes and he makes a trade. And this trade, kaboom. It goes fantastically well. And he makes, let's just call it, and I'm going to keep these numbers small to, actually, no, I'll make them a little bit bigger to emphasize the impact. But let's say he makes $100,000 on it. Now, the key word being he makes. That is very, very, very important. Or in technical jargon, in trading jargon, he has realized the gain. Because in all actuality, you have not made any money until you sell. Just like you have not lost any money until you sell, until you have realized the gain. But if you are a trader and you make $100,000, that terminology literally means, okay, so you've realized the gain. A lot of times people are like, yeah, man, I made like this amount. And you say, oh, so you sold? No. And you got to tell those people, well, no, then you haven't made anything. Because to be fair, maybe you're about to make even more because the price goes higher. But maybe you're about to make nothing because if the price drops, then you're not at what you are. So you don't officially make anything. Again, a very important word, until you realize the gain. Just like you don't lose anything until you realize the loss. But in this situation, Tom makes $100,000. And I should have probably noted, but let's say this is all happening in tax year XYZ. All right, I know, very creative. So tax year XYZ, this is where all this is happening. Tom then goes and he's thinking, wow, I'm great, I'm fantastic. So he goes and he now puts on another trade. And in this situation, and I should note that he's going to take this one, $100,000, and he's going to put that into the trade, right? So he's making another trade and he's using that $100,000 well, because he realized the gain. He's got an extra $100,000 in his account. So he's going to use that. And this trade, for whatever reason, not doing so well, goes down. But it is unrealized. Meaning, hopefully you're saying, well, that means basically he's still holding, right? Because as I mentioned earlier, it's also, you don't officially lose money until you sell. So if you hold, then it's just simply an unrealized loss. As soon as you do sell, that would convert it to a realized loss, right? And I don't mean to repeat myself with these terms, but they're very, very important. So the point here is that, yeah, Tom took that $100,000, put it into a trade. Trade's not doing well, at least as of now, but Tom still thinks it will do well. So he's holding and he's looking at an unrealized loss. But here's the problem, and here's the issue. At tax time, the IRS is going to say, you made $100,000. Now you could come back and say, well, no, that $100,000 right now is actually only worth, let's just say $50,000 because it's in another trade. The IRS is going to say, no, we don't care what you do with that money. You realized $100,000. So as far as we're concerned, you owe taxes on $100,000. So what is my point? My point is, before you go and take any sort of gains and put them into another trade, make sure that you grab some of that $100,000 and move it up here. Where are you moving it up here? On your spreadsheet, on however you track your budget, put that in some sort of IRS column and realize that the IRS is now looking at that as money that you've made. So if you are still holding on to something that you use that $100,000 for. And to be fair, maybe that goes back up and everything's fine, but IRS they'll get that money the next year. But if this is all occurring in the same tax year, when that year is over, and if you're still holding some of that $100,000 in another trade, well, you know what? The IRS is coming for you. And they're going to say, you owe this amount of taxes based on that. And if you don't have that, well, then, like I said, I'm not going to be over dramatic and say they show up and break your kneecaps and take your house or whatever. But they're going to say, well, okay, we're going to put you on a payment plan. This payment plan is going to have interest attached to it. And now all of a sudden, your cash flow is going down because you have these IRS tax payments when they're charging you interest, and it becomes very, very messy. So just like I said, be aware, be warned that if you make money, if you realize a gain, fantastic, congratulations, set some of that aside. How much do you set aside? You know, I'm not going to go down to that rabbit trail because that's going to depend on where you live locally. So talk to a local tax professional and they're going to tell you, okay, yeah, you made that amount. Okay, set this amount aside so that when taxes come due, you won't have any nasty surprises and you'll have that money already available to you. But just realize that this is how it works. And when everything is occurring in the same exact year, things can get really bad. But to reiterate, if you make $100,000 and you don't make any more trades, and then it's the end of the year, well, you'll have money for that. Unless, of course, you go out there and you spend that $100,000 on, Louis Vuitton satchels or whatever. Well, then at that point, yeah, you're still going to be in a very bad situation because they're going to say, hey, you made $100,000. Like, oh, well, I already spent all that money. Well, you have a problem there too. But like I said, I think a lot of people forget about it, and I didn't realize it too when I got started. But yeah, you would think, okay, I made $100,000, my account's bigger, I want to grow my account, let's go put that into another trade. Well, in some situations, if you don't have taxes, you may be forced to sell that and realize the loss so you can take some of that money and pay off the IRS, which would cause you to take a loss when you didn't really want to because you thought something might recover. But at the core, and just to reiterate, the solution to this potential problem is if you make money, figure out how much of that money you should be setting aside, take it out of your trading account, get it out of the way, and put it into, put it into like a savings account that pays you a little bit of interest so that when the tax man comes knocking, you'll be like, here you go, leave me alone. So be aware of it. Don't fall into it because I've seen it happen and it can just produce very nasty results and it can just really harm wealth building when all of a sudden you have your cash flow going down every month or you have to sell some sort of position when you didn't really want to sell it. And like I said, it can just really derail plans from a wealth building point of view. So hopefully this helps. If you enjoy videos like this, hit the like button, leave a comment below. Do you know anybody that's had a situation like this? Like I said, or have you been in a situation like this? Horror stories are always excited and very beneficial from a learning standpoint. So leave those down below. But if you enjoy the videos, like I said, hit that like button, leave a comment below. Thanks for hanging out. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.